Hey guys, welcome to the video here. And like I said before in the last video, this is not here to induce any panic or fear. I'm actually going to give you some tips on what stocks to look at this upcoming week. So if you didn't catch yesterday's video, make sure you do. I pretty much discuss, what's going on in the market, what happened last week, where I think the market could be going here in February 2021. Are we entering a crash? Could we see a bigger crash correction? All that kind of stuff. I explained my thoughts in that video, so I encourage you to check that out. But today the focus is really to talk about a few stocks that have caught my attention, that have been selling off, that I think, may be overdone and we may have an opportunity here to actually make some good money off of. So the first of these stocks is Clover Health here. Clover Health is a recent SPAC that Chamath brought to the public markets here, and they merged with IPOC. This company it's very interesting. I made a video on this. I explained why I think this company has good potential over the long term. Still a fairly small company, couple $1 billion market cap. It's not, something that everyone wants to get into right now because it is kind of a bit speculative too. But I like the place that they're in. I like the direction of the company, and I think the dip that we're seeing now is a pretty good opportunity. So this week you can see we had a really volatile week. We, started off the week around $14, jumped all the way up to like $16, $17, and then ended off the week around, $14, pretty much where we started at. So not a whole lot in terms of appreciation this week, but it kind of tells you that there is a lot of eyes on this, a lot of volatility. Now, one thing to note is that Robinhood actually is restricting this stock, and I believe they started that restriction either on Thursday or maybe it's on Friday, or maybe it starts next week. I'm not too sure, but it is on the list for Robinhood restrictions. So keep an eye for that. It's gonna probably affect this in the short term, but if you're a long-term investor looking for a good opportunity, this may be a good first one to watch. It's down quite a bit since it went public, right? Since its high is around 20%. Pretty good opportunity. Keep an eye on this one. Okay, next one, Facebook. Is one of the largest companies in the entire world, $735 billion market cap. In my opinion, should be over $8 trillion company. We made a video on this one as well. Right here, is Facebook stock about a 2x? Is it undervalued? Summary of that video, yes, I believe it is severely undervalued. And you can see that after this week, it's gotten even more undervalued here. Over the last month, the stock has kind of hit a peak of 282. Now we're down around 8%. But over a longer time period, we hit our peak back in August, just over $300, and we're down around 15% right now. So we're getting a good discount on a strong company. I may be wondering, why is Facebook down? Like, what's going on? Well, they reported their earnings, and you read this, everything looks extremely strong. They destroyed on EPS here compared to what analysts were expecting. They destroyed on revenue. They beat on daily active users, monthly active users, average revenue per users. This was a picture perfect earnings report. However, many investors, maybe they decided to take profits on this. I don't know. I don't know what the reason for the sell-off is. My inkling is that it has to do kind of with the whole, delete Facebook, the whole WhatsApp controversy. Investors are probably expecting a dip in all of these numbers over the next quarter because a lot of that happened here in January. So we'll see what happens. Long term, guys, this is a cash flowing machine. $28 billion in revenue, high profit margins in this business, tons of cash on the balance sheet, over $50 billion the last I checked, probably more than that now for this quarter. No debt. This company is here to stay, and I think this is a no-brainer buying opportunity in Facebook stock. Now, could it go lower? Just like any of these other stocks, could it go lower? Absolutely, especially if the broader market sells off. However, if you've been waiting to get into like a giant stable tech stock, one of the blue chip stocks out there, it's kind of hard to ignore the opportunity right now in Facebook, at least to start a position in. Visa is our third stock here, and I kind of briefly discussed this in yesterday's video as well. It's another name that I think, it's being overlooked right now. That's just the real simple way to say it. Visa is down around 12% off of its highs, which is not bad because if if you look at Visa over the long term, this is a stock that doesn't really see too many dips. You see a little dip there. Like it sees a few dips here and there. This was obviously the March crash, so everything dipped. This was when the whole market dipped again. So it's rare to see Visa dip solely on its own. But again, last week we saw the market kind of pull back. That probably contributed a bit more to Visa's pullback as well. And funny enough, Visa also reported their earnings last week. Net revenues were actually $5.7 billion for the year. Wall Street had it at 5.5, so they beat their EPS. Also, they beat 1.42, better than 1.28. So a strong beat there for the company. But bottom line was that the revenues were down 6% year over year. And I listened to the earnings call. They're pretty much because of cross-border spending. That was the main contributor here. So once things open back up, I have no doubt this company is going to go back to where it was before and surpass that in a quarter or two. This is a strong business. A couple other things I took from the earnings report is that the company is really doubling down here on things like crypto. They want to be a serious player in that. They talked about the Plaid merger that didn't go through, but they said that kind of opens up the opportunity for more things for them. So hey, that's some interesting stuff. And the health of this company, I think, is just unmatched when you're looking at these large fintech plays. Square's a popular one, but I think Visa is my favorite by far when it comes to fintech. So that's another one I think you guys should keep an eye on this week, okay? So that's number 3. Number 4, Lockheed Martin. This is one we've talked about. This is one I've covered in previous videos. I believe I covered it in like the 3 stocks videos a month or 2 ago. But this one's kind of been on a downtrend for a little while here. The last 1 year, you can see we kind of hit, before the whole issue, March 2020, the stock was up near 450. Now we're down near like 300, 320. So we're down quite a bit, 20 something percent. Last 6 months, pretty much the same thing, down 20% or so. This is another strong business, high dividend payout, good market cap, so it's a very stable company, extremely low PE. Guys, if you're looking for a play in the aerospace and defense sector, you want a company that's still growing. Yes, Lockheed Martin is still growing year over year despite everything going on. You want a company that's stable. You want a company that, pays a good dividend, raises that dividend. This thing checks off all the boxes. It's just kind of out of favor right now because of, obviously because of 2020, but also because of the administration change and all that stuff. And there's always fear around spending on defense. Guys, I think this company is going to be fine. Government contracts are still strong. Outlook is still strong. Business still looks good. It's kind of it's a deep discount stock right now, and it's hard to ignore this. Now, this could trend lower. This could come down to where the March lows are, just around 276, probably like around the $300 level. We could come down there, kind of trickling over the next few weeks, especially if the broader market sells off. So you want to kind of keep an eye on that. But again, if you're looking for exposure in this space, Raytheon's another good one that I personally own. Lockheed Martin is one that I'm very close to buying. I think it's showing us a lot of value, and even if it's for kind of a short term, 6 months, 12 months, a couple years trade, I think this one is going to bounce back pretty strong. Because if you look at its longer term chart, this thing can really move. In like good markets, this thing can really move, right? 2019, look at this move. It had about like a 68% move. Here it had about another 60% move. So this thing, it pulls back, but once it's ready to move, it moves. So keep an eye on this one. And finally, we'll close off with kind of a safe consumer staple stock, Kimberly-Clark. I'll give you another bonus one in a second here if you stick around. But let me just talk about Kimberly-Clark for a second. So Kimberly-Clark, safe blue chip company, reasonable PE, reasonable market cap, strong dividend yield. Down for the week, from the highs of the week, we're down around 5%, 5.5% over the longer term period. You can see the stock has just kind of been trending down around 15, 16%. This is not a stock that's going to make you rich over time, but it is a stock that's going to help you preserve your wealth over time. You want to have these kind of companies to balance out your portfolio. That's just my opinion, and that's my approach. Because when you have market drawdowns, you have market corrections, market sell-offs, companies like this typically hold their value much better than other companies. Now, in a market crash, everything pulls back, everything sells off. It's very, very rare that you're going to have a portfolio that's up if you're to the long side during a market crash. But you want to find companies like this to kind of just balance things out. You know, if you have like Tesla and I don't know, like Virgin Galactic and like some other highly volatile, highly speculative stocks, you want to have some of these to balance things out. So your portfolio isn't down like 30, 40, 50% when the market's only down like 10, 15%, right? So that's just my opinion. Kimberly-Clark, another one to keep on your watch list. And on that note, I think consumer staples as a whole is starting to show a ton of value here. We're seeing, you know, I'll name some names here: Pepsi, Coca-Cola, Procter & Gamble, McDonald's. These are just names that are starting to show some value here. You definitely want to keep an eye on these stocks, especially if you don't have them in your portfolio and you want to balance out the portfolio more. Now, bonus stock. Let's talk about a bonus stock. I just thought about this here. Tattooed Chef. So this is one I've been watching very closely. As you guys know, I own a position in Tattooed Chef. I am up on my position in Tattooed Chef, but you know what? The stock has kind of been, it's had its ups and downs. I bought somewhere around here, I believe. So we're on an up now. And honestly, I'm watching this to see if it pulls back to below $20. If it pulls back to like the high teens, this could intrigue me once again. It's still a fairly small company. You know, it's still kind of in its infancy stage, but this trend with healthier food, plant-based food, and with them approaching frozen foods, I think it's a long-term winner. And as you guys know, I'm a huge advocate for Beyond Meat. I think that Beyond Meat is going to be one of my biggest winners over time. And no, I'm not vegan. I'm not saying that because I'm not vegan, but I believe that the trends and the numbers that the company's posting and the growth that they're showing us, it's clear to me that's a big winner. And I think Tattooed Chef can actually kind of follow along, kind of tag along with the ride. I don't think it's going to ever overtake Beyond Meat in terms of size, market cap, dominance in the marketplace, but I think it has a good shot of just kind of riding along with that whole wave. So that's another one to keep in mind. But anyways, guys, I hope this video was insightful. If it was, consider smashing the like button and subscribe for more videos like this. And I did have a Nokia video planned for today. We'll see. I may release that later tonight or maybe tomorrow. But either way, guys, hope you enjoyed this video. Thank you so much for watching. Don't forget to invest positively, but I'll see you in the next one.